Hello, everybody. So, I wanted to make a new cryptocurrency video because it's gotten way more out of hand since the last time I made a video about it. So, basically, the I'm a crypto doubter or crypto skeptic, as you would want to say, where I do not think that the benefits of the technology are sufficient to outweigh its downsides when compared to fiat currency. And so I just don't think that blockchain technology is going to be able to replace the banking system um, because it's inefficient. So the main argument that people use is decentralization. The idea that if it's decentralized and there's no owner, it's more desirable. But no, it's price and quality that determine whether or not something is going to be used. So if the price is higher and the quality is lower, it doesn't matter if it's decentralized or not. One of the examples is using blockchain instead of Microsoft Excel to store your info. And people are like, "Oh, well, what if Microsoft does this or that? Like, if you don't own the rights to Excel, if someone else does, then they have power over you." So people think that the blockchain technology, because they're not owned by anybody, will just be adopted because people will prefer it to things that are uh, centrally owned. And I will just say that it's impossible for a blockchain product to be more efficient than a trusted third party when you're talking about any kind of transaction. And that is borne out by mathematics. It simply costs a lot to generate consensus with a blockchain, no matter how you do it. So, as I said in my last video, if there was some magically efficient way to make blockchain technology work, it would be proven in the math first. So if you're really, 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 really into crypto, you should probably know who the best mathematicians are in terms of cryptography and and also blockchain, and see if they have any mathematical models for anything like proof of stake or proof of work, whatever method they use, or proof of whatever. Some kind of mathematical model that demonstrates that it can be done efficiently. But it doesn't make sense because, you know, a trusted third party is just an inherently more efficient way to verify something instead of having to get consensus through some kind of mechanism. So, my point is that cryptocurrency will never be able to compete in the real economy against something like fiat currency. And that's true of NFTs also. So, what's amazing to me is that there's been this sustained tulip trade that, like, nobody seems to be regulating or putting a damper on. Like, if it was up to me, it would be almost worth it to just ban cryptocurrencies because they're nothing but a money pit for people who need to be making wise investments. So, I want to talk about, for people who are into crypto or invested in it, I want to talk about something that is going to happen sooner or later. and that is the collapse of Tether. Now, we saw the collapse of Terra Luna a couple weeks ago, right? I think it was over $1 billion wiped off in market value, wiped off the map in an instant because the algorithmic protocol, the algorithmic stablecoin protocol just broke down and failed. So Terra, the stablecoin, and Luna both crashed to zero. And that someday will happen to Tether too. And I've been waiting for it for a long time, but Tether is very, very pumped, but not enough to cover itself in a serious downturn. So, like, if Bitcoin went back down to 5K, for example, I don't think Tether would be able to survive. And I've been following a lot of Tether skeptics who do a lot of research into Tether's real holdings and all this. And it's true that a lot of the money that is invested in Tether has been leaving for other better stable coins. For those who aren't into crypto, Tether is just it's just a cryptocurrency that stays pegged to the US dollar. So one Tether is always worth 1 USD. And the only way to make that true is to back it with some kind of real asset or just lie your ass off and run a Ponzi scheme like Terra Luna. So the problem is that none of these coins are backed as much as they would need to be in a serious downturn. It all looks great when things are going up and up and up, but as soon as if they're not, as soon as there's a serious downturn, there's serious problems. So basically, my point is that sooner or later, at least within 5 years, but probably much sooner, Tether will go the way of Terra Luna. And that will cause a massive, massive crash. Even if Tether is still so central, guys. I can't explain. This is like the great irony of cryptocurrency, is that the whole point was to make fiat obsolete, and yet the entire cryptocurrency ecosystem depends on stable coins like Tether. So they're still tied to fiat, needing fiat and measuring their asset value in fiat. So if Tether can't maintain its peg, that will nuke the cryptocurrency exchanges and everything else. So there's just a lot of problems with the whole ecosystem. And Terra Luna is just a minor foreshadowing of what's to come. So, I consider it just a teaser or a spoiler for the Tether collapse. Me personally, I'm really looking forward to the Tether collapse because it'll wake a lot of people up in a way that, when Bitcoin goes down 40%, 50%, that's nothing. That whatever. It has to go down 90%, 95%, 98%, which it will, because the technology isn't there. It's not good enough to fulfill the use case that has given it this speculative valuation. So, you can't act like, I think it's absurd in 2022 to still be acting like mass adoption of Bitcoin is something that's on the table. Like, just no. I'm sorry, just no. And I'll stake my bet on it, right? Like, we'll still be using dollars in 50 years, guaranteed. It's the only way you can pay your taxes. And NFTs are even worse. They're even worse. So, I want to talk about kind of what you're doing when you invest in cryptocurrencies. And what you're doing is speculating hard. It's very much like a casino. There's Ponzi's left and right, pump and dumps, aka Ponzi's left and right. And you are, they use the term investor, like you can invest in a coin, but you're not investing, you're betting, you're gambling. Because you're not investing in something that generates a return and has underlying value. Like if you own a share of a company that has underlying value because the company generates revenue. A currency, you can't invest in a currency. Well, you can invest in a currency, sorry, but you can't invest in an altcoin or a crypto coin. It's much more like picking a horse in a horse race. Or like I invested in this racehorse with my bet that it's going to win. The main thing that motivates this, I think that there is a steady, static demand for get rich quick schemes. And the promise of getting rich quick is what has created this entire explosion of crypto everything. And I want to give life advice to anyone who will listen is that if the get rich quick scheme, if everybody already knows about it, you're too late. So, yeah, Bitcoin was a good get rich quick scheme when nobody knew about it. But it's not anymore. You're always going to be way behind the curve unless you're on the cutting edge of something. Like the early adopters of Bitcoin were very esoteric, you know? Like they came from a really niche community and got really lucky. So, like, you have to realize that you're at the very tail end of the pump and dump, of the speculation. You're the late arrival. So all this money that's being pumped into these useless assets, these altcoins especially. Just real quick, the only altcoins that have any value is Monero, which probably has more value than Bitcoin in the long run. Monero and maybe Ethereum. Everything else, no. Anyways, moving on. There always seems to be some kind of get rich quick scheme that is in hot demand because people are really drawn in by those things. But I think that get rich quick schemes should be censored. Like crypto.com shouldn't be able to buy the Staples Center. I don't think. Because they're it's like allowing the worst of the .coms to buy a stadium during the .com boom and tell everybody to buy .com stocks, and everybody's buying .com stocks as a way to get rich quick. You know, it's like you're too late if you're doing that in, God, I don't know what year it was, 2002 or whatever. If everyone's already on the .com train, it's too late. And it's going to come crashing down. So the crypto atmosphere is absurdly bubbled up. There's even like crypto credit cards now. I mean, it's getting stupid and ridiculous. It's stupid and ridiculous. And the people that I know who understand the technology agree with me. Um, it's ridiculous the amount of pump that is going into the whole crypto atmosphere right now. These crashes, guys, like I said, Bitcoin crashing 30%, shitcoins crashing 80%. That's nothing. Terra Luna. Terra Luna is the vision of things to come, the harbinger of things to come. And I can't wait for it because it'll be like finally this pump and dump get rich quick. It's like the .com bubble, right? Like, yeah, sure, the internet technology is great. That doesn't mean that every .com's great. And I would say cryptocurrency isn't even that great. But anyways, the point is, a decentralized, trustless ledger is one thing, and a cryptocurrency is an implementation of that technology, an imperfect implementation, an inefficient implementation. So, people are always trying to find a cheap, easy way to get rich for doing nothing. Guys, please, if anyone can listen, the only way to get rich by doing nothing is to get lucky. I'm sorry. If your get rich quick plan involves doing nothing, just sitting on your ass and clicking a button on your computer, man, that's just not how getting rich works. Especially not getting rich quick. Unless you're getting lucky. So, there are, I would say another common argument that you'll hear from crypto people is like the mass adoption that's happening from institutional investors. And I would just say, yeah, institutional investors they're gonna be involved in any bubble, any giant bubble. They're gonna at least dip their toes in it. Like, how many pension funds bought trash .com stocks? Is that an argument for the .com stocks? No, because the underlying value hasn't changed. So who cares? Like, one of the biggest VC firms in the Silicon Valley just put in like some absurd like 4.3 billion into crypto. And everyone's like, "Oh my god, see, this is like the thing that's going to be mass adoption." And it's like, no, guys, they are speculating. They're hoping for another pump and dump. They've decided they're predicting that the bubble hasn't popped yet. But there is a bubble because the underlying assets are not worth what they're trading for. So, but you can't try to time bubbles, guys. Otherwise, you could get rich quick by doing nothing. I could get rich really quick by just shorting Bitcoin, right? And shorting Tether. But no, I can't, because I don't know when it'll happen. I know that it's a bubble, but I don't know when it's going to pop. There were a lot of hedge funds that knew the .com bubble was going to pop and knew the housing bubble was going to pop, but unless you can time it, you're going to go broke buying puts. So, or you're going to go broke doing direct shorts. So, it's all gambling, guys. The only thing that's not gambling is when you invest in value investing. You own a share of a company that you know provides value and has things of value. So, it's just a shame that people are always getting into these get rich quick schemes. And guys, if you're this late to the party, like, the crypto party was in like 2016. It's way too late now. 2016, 2015, that was when you could get really rich quick off crypto. Not anymore. Most people that invest right now are going to lose their ass. But I don't know when, so I can't make money off of it. So, anyways, for how you get rich, like how do you get rich if you can't get rich quick? Well, I'll tell you. Guys, you have to handle your money. You have to act like a machine, a smart machine. So you should invest a set amount, however much you can afford, on regular intervals so that you get price averaging. And you should buy just Vanguard funds is all you need. Just pick some good Vanguard funds, whatever. If you're young, then you want to take growth stuff. And if you're old, you want to take yield stuff like bonds. So the point is that to get rich, you have to be patient and disciplined. You can't try to chase guys like everybody, even professionals who try to time the market, get burned. You can't do it. So if you're always trying to buy and sell, you're wasting your time. Individual stocks too, you're wasting your time. I would say you should only get an individual stock if it's for fun, like you're interested in the company. Obviously, if you buy Microsoft, it's not going to go to zero. But it's better to just buy the NASDAQ, right? Diversify, why not? Microsoft and the NASDAQ, they're going to be roughly the same, you know? Microsoft's going to be more volatile, but the tide flows in and out at pretty much the same rate. So, you know, betting on individual stocks is just that, betting. Unless you have some crazy secret knowledge that no one else has, or some niche knowledge or some niche expertise. Like if you were a cryptography expert in 2012, then yeah, you can buy some Bitcoin. But during the get rich quick times, things are not usually very easily accessible. It's accessible only to an esoteric group of people. Look at Bitcoin. When it was truly low, like worth what it's probably worth, like one Bitcoin being worth like $3, that's probably what it's actually worth. The only way there was no Coinbase, there was no crypto.com, so the only way to buy Bitcoin was by doing it directly off the blockchain, and that takes knowledge and a little bit of expertise, and you have to know what you're doing, and you have to know how you're going to store your wallet, and you have to at least understand a little bit about how their technology works. So like the ship, you're seeing the ship after it's sailed, you know. When you're on the cutting edge of something, when you're on the budding edge of a technology that's just going to explode, you'll know. You won't have to have someone else tell you and run an advertisement on TV. There's not going to be an ad on TV for it. So I just feel really bad that all these people are getting scammed into buying cryptos and NFTs. And I do get a little bit of schadenfreude from watching things like collapse, because a lot of the crypto people are like, you know, they think they're going to get rich by doing nothing. And that's kind of offensive, you know? And it's kind of funny to see their plan not work. It's like, yeah, you can't get rich by just sitting on your ass, you fuck, you know? So I kind of like it when get rich quick by doing nothing plans don't work. But at the same time, it's sad to see people actually get scammed by this stuff. So what can I say besides don't buy crypto and don't buy NFTs? If for some reason you're really into the concept of a trustless, decentralized ledger, I will tell you that any cryptocurrency has to be fungible. Bitcoin's not. Monero is. So I would say if you're really obsessed with the technology, Monero is the one that will last the longest based on its actual merits, the merits of the underlying technology, because it's anonymized. So go ahead. Monero. Pedos love it. Criminals love it. It's great for them. It's an anonymized currency. Can't trace transactions. What a wonderful thing to bring into the world that we needed so much, right? But if you have a fetish for that, then yeah, buy some. But the other coins, no. You're not going to make money. You're not going to get rich. So, anyways, to get rich, you need to be patient and disciplined. You have to be like a machine. Machines get rich. Robo traders, they get rich. Because they stick to a rule set that they know works by backtesting. Or, well, that they assume that they know as best they can works. Just like investing in the S&P 500. If you just throw money into the S&P 500 at a regular rate for 30 years, you're going to do fine. And if you don't, it's very likely that whatever happened during those 30 years would have nuked any other investment you had anyway. So yeah, I guess that's like my crypto update. It's getting ridiculous. The amount of shilling, the amount of pump and dump, the amount of scams, the amount of Ponzi's is absolutely ridiculous. Terra Luna is just the beginning. Just the beginning. So there's some solid entertainment involved. Like, if you don't know about crypto, read about the Terra Luna fiasco. Like, it's crazy. It's like wheeling and dealing like 1800s banking before there were any regulations. Like, there's just people committing horrible scams and stuff. So, and NFTs are even worse. If you don't know about NFTs, just read about the Bored Ape Society. That's like the poster child of NFT excess, the NFT tulip trade. Bored Ape Society. It's a great example of it. And man, it's all just so dumb. I'm sorry, it's so dumb. So yeah. Cool. Oh, another example is like GameStop stock, for example. Like, to take advantage of that initial short squeeze, you had to be involved in a really esoteric community. Not that many people got rich off the initial short squeeze. And then by the time everyone's heard about it, it's too late. And everyone's waiting for another short squeeze somehow, even though the hedge funds have got out forever ago. The point is that you're not going to be able to get rich by finding something on Reddit or finding something on the news. You're going to have to, unless you get lucky, because it's hard to be ahead of the pack. You have to be ahead of the pack to win. You have to be the first to win, not the 300,000s. So, yeah, just don't waste money on trying to get rich quick. You're better off just using that money trying to get rich slow and get rich patient. It'll pay off better in the long run. So cool, thanks.